What's going on, guys? This is Aaron from Departures Capital. We're here with Mitch Bernard, CEO at Wildpack Beverages. Nice to have you back, Mitch. How are you doing?
Good, man. How are you? It's good to see you again.
Yeah, for sure. I'm great. Excited to be talking with you. So can you start by giving us an update on the company and everything you've been up to? I know we're going to be talking about this acquisition, so I'm excited to hear about it.
Yeah, so I think, obviously the elephant in the room is land and sea. That's what we've been up to. Most of our team's been up to dealing with, whether it's integrations through financing, through M&A completion. That's where the bulk of our work has been over the last couple of months. Aside from that, the main focus of the business was, once we kind of knew the land and sea thing was going to happen, was building up the internal expertise to be able to continue to scale at an even more accelerated rate, because obviously land and sea gives Wildpack a significant more bulk behind us, which allows us to actually start accelerating our M&A strategy even further. So, just making sure that we're onboarding more key operators in key aspects of the business, specifically, the supply chain, forecasting, procurement arms of our business, shoring all of that up to make sure that, as we continue to accelerate, we're meeting all of our, requirements on the back end of our business. So that's been the main kind of, operational focus for Wildpack over the last couple of months.
Definitely. So yeah, like we just said, the most exciting news recently was your, acquisition of land and sea in Michigan. This acquisition delivers on your 2021 strategic business plan to acquire 6 facilities by year end. So congratulations. Is there anything else you want to talk about when it comes to that?
Yeah. So, like land and sea, obviously our plan and what we promised the market when we went public was we're going to get to 6 facilities before the end of this year. So the most important thing for us is we've made good on that promise. A bonus to that is, like the other acquisitions we've done with Craft Pack in Georgia and Vertical in Longmont, is land and sea comes with exceptional operators. Tim and Kim Murray, the co-owners of the business, who are staying on, and Kim's joining our board, and Tim's taking an observer seat as well. They have built a unbelievable business with little to no capital infusion along the way, which makes it even more, exciting and interesting. And they've really built, I would say, world-class level customer service, and that's really what has driven their growth. So being able to take that and apply it, to Wildpack as we continue to grow to serve the middle market and create, like we've talked about before, a better ecosystem for innovative beverage brands to incubate as they continue to grow through, their value chain. Adding that layer of expertise behind us makes Wildpack an even more dangerous company in our, ultimate ambition to dominate the middle market beverage space. So, beyond the nuts and the bolts of, we bought a really great company with really, really great cash flows that fully integrates into our business kind of perfectly. We're getting amazing people along with it that we're really excited to stand shoulder to shoulder with and build Wildpack to what, our ambition for it to be.
Yeah, for sure. I was actually on LinkedIn yesterday, just taking a look at Kim and Tim, and they seem like great people. So, and like you said, with that focus on customer service, that was one thing that stood out to me. So with this acquisition, like you said, the owner, Kim Murray, is going on the board, and then Tim will be the COO. So they will receive a large portion of the purchase proceeds in shares, which is nice because their interests are aligned, of course. So how will Kim and Tim, that rhymes, strengthen the team at Wildpack? Yeah,
so they're again going to obviously keep running land and sea the way that they've been running it. Land and Sea's, printed can brokering business, standalone, is an exceptional business. Obviously, there's going to be integrations with a lot of, the things that we do. Our co-packing lines run a lot of customers, some customers, I should say, that are in printed cans, and they'll work there. The real focus for them as far as how it applies to Wildpack is, again, developing and building a customer relationship profile and program, and really disseminating that across our sales and marketing teams for each aspect of our business: decorating, aluminum can brokering, co-packing. That's going to be a major focus. And then building an internal forecasting and procurement division, because that's really one of the areas that they've set themselves apart in the aluminum can brokering business is, building relationships with their customers where they know more about their customer supply chains than most of their customers do. When you replicate that across Wildpack, you're not only creating more opportunity for us to generate revenue, but you're also making it more likely that the brands that you co-pack for will continue to, or decorate for will continue to grow and kind of prosper, which ultimately creates a better relationship for us. So again, like they're really going to be ecosystem incubators at Wildpack because at the end of the day, like our core focus is to become the best manufacturing partner we can and give the people we work with the best chance of being the most successful that they can. So that's really going to be the key focus for Tim and Kim.
Yeah, that's really interesting how much this acquisition makes sense. So, so the acquisition also diversifies Wildpack's aluminum can supply to include one of the largest domestic can producers in the US. As you know, there's a global can shortage right now. How will this benefit your business?
Yeah, so obviously, we look at the aluminum can market the same way we did before we bought Land and Sea, which is North America is massively oversold to the point where solely relying on it doesn't make a lot of sense, which is what led Wildpack to putting a hedge on with international can supply. We still stand by our position, even by acquiring a very entrenched long-term relationship with a major national kind of domestic, I should say, can maker, that isn't going to be enough to support Wildpack's growth, albeit it will allow us to unwind our hedge faster as we gain more access to domestic cans. So that's number one, which ultimately obviously leads to decrease inputs and increase gross profit margins on the long term, on a 3 to 5 year horizon. But for us, again, we're still going to keep our long-term hedge in place. We think the can shortage in North America isn't going to get better anytime soon. We're actually a little bit more pessimistic than I think a lot of people in the space, saying a lot of people think that you'll see normalcy happening kind of mid 2023. We see that being more like a 24, early 25 problem. So we will keep our hedge in place, but we will start slowly unwinding it and maybe a little bit more accelerated now because we do have a little bit more access to domestic supply through Land and Sea. So as we continue to gain market share in our other aspects of our business, decorating and aluminum can brokering and co-packing, we think that we'll become a better value prop for the big domestic can makers as a call it a distributor in the middle. As we move into more and more regions doing more and more things, it makes more sense for them to work with us, again leading to us unwinding our international can hedge a little bit sooner. So ultimately, obviously it puts us in a better position, but again, you're just adding diversity to an already very hedged program.
Yeah, exactly. So the acquisition is in Michigan, which means you now have a facility in the Midwest.
Yep.
The majority of your facilities are located either East or West Coast. It makes a lot of sense geographically. Can you tell us more about that, like in terms of the geography?
Yeah, so Wildpack, our strategic business plan is to get to 12 facilities by the end of 2022. Those locations are very well defined. When you draw enough circles on the U.S. map based on end distribution, you kind of know the regions that you need to get into, and one of them is that kind of greater Detroit, northern Michigan region. So it played a very specific role for us as far as taking a good chunk of the map off the table. So we still have 6 facilities that we're looking at putting up through acquisitions or builds in 2022. And again, those are in the blind spots that we have right now. To shortlist a couple, you're talking about the Austin, Texas of the world. You're talking about the southern Floridas, kind of the Minnesota-ish region on the other side of the lake. So there's some key geographies that we still need to get into, but this is just another one that we needed to tick off on the way to full saturation.
Definitely. So what's next for Wildpack as we move into the new year?
Yeah, so Wildpack's still cooking up a few acquisitions, obviously, as we always are. Our M&A team is as busy as ever. So, obviously focusing on finishing the year very strong with the assets that we have. We're still finishing our printing division, which should come online here very shortly. We're building out our digital assets to create a better user experience for beverage brands so that they have a more streamlined live stream type feel on what their supply chain looks like. And then I think you'll see much of the same. Frankly, we're going to keep growing. We're going to keep the pedal down as far as the speed at which we're doing it, and all the while getting stronger operationally as we continue to onboard frankly leaders in the industry at all the key operational positions within our business.
Wonderful, Mitch. Well, thank you so much for all the updates. Good luck with everything, and I look forward to having you back. I know we'll have you back on for more updates in the future.
Yeah, thanks, man. Really appreciate your time.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember Departure's capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below along with thoroughly reading our disclaimer. Thanks so much for watching, guys, and I look forward to seeing you in our next video.